Goldman Sachs, one of the most powerful banks in the entire world. A bank that has been managing the wealth of governments, billionaires, and corporations for over 150 years. A bank that once called Bitcoin worthless. A bank that told its clients to stay away from crypto. A bank that represented everything that the traditional financial world believed about cryptocurrency. That it was a joke, that it was for criminals, that it would never be taken seriously by real money. That same bank, Goldman Sachs, just bought $154 million worth of XRP. And here is the part that is making millions of XRP holders lose their minds right now. The price did absolutely nothing. Goldman Sachs spent $154 million on XRP, and the price is still sitting at $1.40, down 62% from its all-time high, barely moving, going nowhere. So today we are going to answer the most important question in the XRP community right now. How is it possible that the most famous bank in the world just bought $154 million of your coin and nothing happened? Where's the price going? And what does this actually mean for XRP holders in 2026? Stay with me, because the answer is more interesting than you think. Before we get into the details, let me quickly tell you who this video is for. If you hold XRP and you are frustrated right now, this video is for you. If you have been watching good news come out about XRP week after week and watching the price go nowhere, this video will explain exactly why that is happening. And if you are completely new to XRP and you just want to understand what is going on, do not worry. I will explain everything simply and clearly. This is not financial advice. This is an investigation into what is actually happening with XRP right now. Let us start with the facts. Every 3 months, large investment firms in the United States are legally required to file a document with the Securities and Exchange Commission. This document is called a 13F filing. It lists every major position that institution holds. It is public information. Anyone can look it up. And when these filings came out this week for the most recent quarter, what people found inside them was extraordinary. Goldman Sachs, the most prestigious investment bank on Wall Street, is now officially the largest institutional holder of spot XRP exchange-traded funds. Their position is worth $154 million. But Goldman Sachs was not alone. Millennium Management, one of the most successful hedge funds in the world, holds $25 million of XRP ETF exposure. Citadel Securities, the firm run by billionaire Ken Griffin, holds $4.5 million. And in total, 83 different institutions now have official XRP ETF exposure. 83 institutions, including Goldman Sachs, including Millennium, including Citadel. Total assets in XRP ETFs have now reached $1.44 billion. Let me put that number in perspective for you. $1.44 billion. That is not retail investors buying $10 of XRP on their phones. That is professional fund managers, pension funds, hedge funds, family offices managing the wealth of the ultra-rich, all of them officially putting money into XRP through regulated financial products. This is not a small development. This is historic. So why? Is the price at $1.40? This is the question, and I am going to give you the real answer. Not the hopeful answer. Not the answer designed to make you feel good. The actual answer based on what the data shows. There are 5 reasons why institutional buying has not moved the XRP price yet. And each one of them is important to understand. Reason number 1. Institutions are buying ETFs, not XRP directly. This is the most important reason, and almost nobody is talking about it clearly. When Goldman Sachs buys $154 million of XRP ETFs, they are not going on to an exchange and buying XRP tokens directly. They are buying shares of an exchange-traded fund, a financial product that tracks the price of XRP. The ETF provider, the company that created the fund, holds the actual XRP. But the buying happens through the traditional stock market, not through crypto exchanges. This means the immediate buy pressure on the XRP token itself is indirect, not direct. The ETF provider does buy XRP to back the fund shares. But this happens gradually and in a managed way. It does not create the sudden price spike that direct buying would create. Reason number 2. The overall crypto market is being crushed by macroeconomic pressure. Right now, in March 2026, the entire financial world is nervous. The Federal Reserve under its new chairman is being more aggressive about interest rates. There is fear about a potential recession. Global trade tensions are creating uncertainty. Bitcoin itself is down 47% from its peak. Ethereum is suffering. The entire market is in a period of pain. When the overall market is falling, even the best individual assets struggle to rise. XRP is fighting against a very strong current right now. Institutional buying is happening, but it is being absorbed by the selling pressure from nervous retail investors and macro-driven market conditions. Think of it like this. Imagine you are trying to fill a bucket with water, but the bucket has a hole in the bottom. Goldman Sachs is pouring water in from the top, but the macro market conditions are draining water from the bottom. The bucket is slowly filling, but it does not look full yet. Reason number 3. The market has not yet fully understood what this institutional data means. The 13F filings that revealed Goldman's position were only just published this week. The market is still processing this information. Institutional adoption of any asset is a slow-moving story. When Bitcoin ETFs first launched and institutional money started flowing in, Bitcoin did not spike on day one. The price appreciation happened over months as more and more people understood the significance of what was happening. We are at the very beginning of the XRP institutional adoption story right now. The Goldman Sachs filing is the opening chapter, not the final chapter. Reason number 4. There is significant selling pressure from large XRP holders. Data published this week shows that the top 10 XRP wallets control over 11 billion XRP. The top 50 wallets hold approximately 40 to 45% of the entire circulating supply. At the same time, Ripple has been unlocking 1 billion XRP from escrow every single month as part of its scheduled release program. Not all of that unlocked XRP gets sold, but a significant portion of it enters the market as available supply. When institutions are buying on one side, and large holders and escrow releases are creating supply on the other side, the price gets stuck in a range. The buyers and sellers are roughly balanced. Until one side overwhelms the other, the price does not move significantly in either direction. Reason number 5. The regulatory environment is still creating uncertainty. Even though the SEC dropped its lawsuit against Ripple, even though the regulatory picture for XRP is significantly clearer than it was 2 years ago, there is still uncertainty in the market about the full regulatory framework for cryptocurrencies in the United States. The Clarity Act is being debated in Congress right now. Until that framework is fully established, some large institutions that might want to buy XRP are still sitting on the sidelines waiting for complete regulatory certainty. Once that certainty arrives, the institutions currently on the sidelines will enter the market, and that is when the supply and demand balance tips dramatically in favor of buyers. So those are the 5 reasons the price has not moved yet. But now let me tell you what this Goldman Sachs filing actually means for the future. Because the significance of this moment goes far beyond the $154 million number. Here is something you need to understand about how institutional money works. When a major institution like Goldman Sachs makes a first investment in any asset, they rarely start with their full intended position. They start small. They test the waters. They watch how the asset performs. They study the liquidity. They monitor the regulatory environment. And then, if everything looks good, they scale up. Dramatically, $154 million is a large number for most people. But for Goldman Sachs, which manages over $3 trillion in assets, $154 million is less than 1/100% of their total assets under management. It is a pilot position, a test, a toe in the water. The question is not whether Goldman Sachs bought XRP. They did. The question is what happens when they decide to scale up from a pilot position to a real position. And Goldman Sachs is not the only institution in this filing. There are 82 other institutions alongside them. Each one of them is also in pilot position territory right now. Each one of them is watching, testing, learning, and waiting for the right conditions to deploy significantly more capital. Now let us talk about the bigger picture. Because Goldman Sachs buying XRP ETFs did not happen in isolation. It happened alongside a series of other major developments that together paint a very clear picture of where XRP is headed. In the same week that the Goldman filing came out, MasterCard officially launched its crypto partner program, and Ripple was one of the 85 companies selected as an official partner. MasterCard's network reaches over 100 million merchants in over 200 countries. Ripple is now officially part of that network. Also this week, data showed that tokenized real-world assets on the XRP ledger jumped 35% in just 30 days to a total value of $461 million. Real-world assets like real estate, bonds, and commodities are being tokenized and traded on the XRP ledger. This is one of the biggest trends in finance right now, and XRP is at the center of it. And just 2 weeks ago, Ripple Prime was officially added to the DTCC's clearing directory. The DTCC processes $2 quadrillion in transactions every year. Ripple is now directly connected to it. Goldman Sachs buying, MasterCard partnering, DTCC integrating, real-world assets tokenizing on the ledger. These are not random events. These are systematic steps in a very clear direction. Now let me address the frustration directly, because I know many of you watching this video have been holding XRP for months or years. You have watched good news come out repeatedly. You have watched the price go nowhere or go down, and you are wondering whether any of this actually matters. I am not going to tell you that the price is definitely going up tomorrow. Nobody knows that. I am not going to give you a specific price target because anyone who gives you a specific number with confidence is guessing. What I can tell you is this. The pattern of institutional adoption that is happening right now with XRP is almost identical to the pattern that preceded Bitcoin's most dramatic price increases. First, the infrastructure gets built. Then the regulated products get created. Then the small institutional positions get taken. Then the regulatory framework gets clarified. And then the large-scale institutional deployment happens. And that final step is when the price moves in ways that surprise everyone. We are currently between Step 3 and Step 4 of that process with XRP. The Goldman filing confirms Step 3 is well underway. The Clarity Act debate in Congress suggests Step 4 is approaching. The investors who made the most money from Bitcoin did not buy it after it became obvious. They bought it during the period when the infrastructure was being built and the institutions were quietly accumulating. That period looked frustrating from the outside. Lots of good news. Slow price action. Confusion about why nothing was happening. And then one day the market caught up with reality. Whether XRP follows that same path, nobody can guarantee. But the evidence available today suggests that the foundations being built right now are as solid as anything we have seen in crypto history. So let me give you my final conclusion on the Goldman Sachs news. Goldman Sachs buying $154 million of XRP is not a story about today's price. It is a story about tomorrow's credibility. Every time a major institution officially puts XRP on their books, it becomes harder for the next institution to say no. It becomes harder for regulators to dismiss XRP as a fringe asset. It becomes harder for the financial media to ignore it. Goldman Sachs just made XRP impossible to ignore at the institutional level. And when something becomes impossible to ignore at the institutional level, the retail market eventually follows. That is how every major asset class in history has played out. And there is no reason to believe XRP will be any different. That is the story. Those are the facts. Goldman Sachs owns $154 million of XRP. The price has not moved yet. But the foundation being built right now is unlike anything XRP has ever had before. Now I want to hear from you. Do you think the Goldman Sachs investment will push XRP above $3 before the end of 2026? Type yes in the comments if you believe it. Type a no if you think the price will stay stuck. And type maybe if you are not sure yet. I read every single comment on this channel, and I will reply to as many as I can in the first hour. If you found this video useful, please subscribe, because my next video is going to cover something that is even bigger than Goldman Sachs. MasterCard just officially partnered with Ripple and connected it to over 100 million merchants worldwide. And almost nobody is talking about it properly. That video is coming very soon. Subscribe so you do not miss it. Thank you for watching. I will see you in the next one.